Today's video is going to be about my M1 Finance monthly dividend stock portfolio. Now, full disclosure, this is a side project that I'm kind of experimenting with over time. I would like to build this up over time to a sizable amount and then take the dividends out to buy other assets. That's what the wealthy always talk about doing, is they use assets to buy other assets. So this is going to be a very high cash flow portfolio. Every single stock in here pays monthly dividends. So yeah, we're gonna go through each one, talk about why the target is what it is, and basically about safety scores and all that kind of stuff. So we're at $390. My goal by June, end of June, is to get this to $1,000. Not really difficult to do that, so I'm not worried about that. The gains on this are we're up 21 bucks, and the return's about 10%. So we started this in August 2021. Pretty good returns, I'd say, in that amount of time, but doesn't really matter what the returns are. We're just looking for the cash flow. So right off the bat, we got S&P 500 high dividend yield ETF or index. That one's about 30% of the portfolio. We go to the dividend tracker here. There isn't a dividend safety score just because it's an index. It always changes. So that's why there's no score there. But the dividend yield is about 3.69%, which is actually pretty good. And we get that S&P 500 diversification. So that's why it's a third of the portfolio. I'm pretty happy with that. So let's go on to the next one. So next one's Realty Income Corp. This is one of my favorite REITs out there. Like I said, 20% of the portfolio. Really good company. We've been talking about them before. But yeah, they've done really well over the past couple of years when things have been kind of crazy. So that's why I'm okay with one company being 20% of the portfolio. Their dividend yield is a little bit lower, but it's safe, 4.22%, and it's got a 70 safety score. So that's actually pretty good. And I actually thought the dividend yield was lower than that, so 4% is actually pretty high. So for a safety score of 70 and a yield of 4%, like you really can't do any better than that. And then on top of that, it's actually growing their dividend too, which is another important factor with dividend portfolios. So I think all around Realty Income's just like a really good company. So that's why we have them at 20%. The next one is Main Street Capital. So this is a BDC, business development company, kind of more the financial sector. So we got that set to 13%. That's kind of what all these allocations are, is just based on diversification, not necessarily what they bring in. But we'll talk about the overall portfolio at the end. So 13% there. Main Street Capital's got a 6% dividend yield, and it's relatively safe with a score of 62. And the dividend growth is a little bit better with 2.4%. So according to this, pretty strong company to be looking at for dividend yields. And again, they pay monthly, so that's why I have them at about a 13% allocation. The next one is Pembina Pipeline Corporation. So this is an oil company. 10% just purely for diversification. Obviously, oil companies are eventually probably going to go away, but once you look at this, you'll see that it's a very safe company and the dividend yields are very high at 5%. They don't really have growth, it seems, with their dividend yield, but that's okay. Like I said, it's a safe company and they're at 5% yield. So paying monthly, I mean, you really can't do any better than that. The next two we'll kind of group together. So we got Prospect Capital and AG&C. I think Prospect Capital is technically a BDC, and then AG&C is an investment corporation, so more of the financial sector there as well. Both of those are 5% of the portfolio. Again, they both pay monthly, but they are kind of sketchier companies. Looking at AG&C first, so 11% yield, extremely high. As you can see, dividend safety score is 23. So for those that don't know, the safety scores are basically measuring like what's the chance that the dividend gets reduced or cut. That's what the safety score represents. So pretty high chance here that they'll reduce the dividend over time. If we go to Robinhood here and type in AG&C and go to the 5-year chart, I mean, their stock price has basically been ticking down for the past 5 years. So it's a sketchier company. I wouldn't recommend it to anybody unless you're just looking for that monthly cash flow, and that's it. So Prospect Capital, kind of the same thing. 30 dividend score, 8%, a little bit safer on that dividend yield. I think their stock price has actually been doing a little bit better, but we'll look at the 5-year chart for you guys here. So it's kind of trading sideways, but a little bit more sustainable of a yield. And that's really the only reason we have them. They aren't really growing their dividends or anything, but with a yield like that, I mean, you could just do like a drip investment and it kind of grows the dividend that way if you think about it. But moving onwards, so we got two more companies. We got LTC and SJR. LTC is another real estate one. I think they do more commercial stuff. And then SJR is a telecommunications company. So this is a Canadian company, 4% there, just for diversification. So looking at those two here, we got 60 for the telecommunications, 3% yield, which is okay. And then LTC considered unsafe at 40, probably because it's just so high right now, almost 6% dividend yield. But I think overall LTC is actually acceptable as far as safety score. But yeah, we're not going to get into the financials today. So yeah, that's the portfolio overall. Performance since August has been pretty well. But yeah, I think these are the companies that we're going to stick with. It's what, 9 companies overall. So pretty simple. Everything's on auto invest and I deposit weekly into this portfolio. So the goal is to get it to $1,000 by the end of June, which if I need to, I'll drop in a couple $100 to get there. So I'm not worried about that. And then let's look at the overall portfolio. So with these companies and the way I have it set up, my yield on cost is 5% and the dividend yield is nearly 5%, which is very good. Very strong, very high dividend portfolio. And then on top of that, it's actually growing the dividends over the past 5 years based on performance. So overall, the portfolio should be paying me more and more, even if I didn't continue to put more money into it. The dividends are slowly growing over time because of these companies like Main Street Capital, Realty Income that are growing the dividends over time. And then, of course, you have the S&P 500 one that has been negative the past couple of years, but that's because of what's going on in the world. I think if markets do recover, this will actually get better over time too, so the growth may actually increase. So yeah, that's pretty much it for the update video on this. We'll check back in probably in June. There's just not a lot to talk about here. Everything's kind of on autopilot for now. The objective is to just get more capital in here so the dividends can do their work. But yeah, I mean, you do 5% yield on cost on $1,000. That's like 40, $50 a year in income that I don't have to do anything for. Not a lot, but that's why we got to grow this to, a bigger number like $10,000 or whatever the actual target is before we start using that money for other things. So I don't know. Like I said, it's just kind of an experiment for me. That's what keeps me interested in investing, is just trying different things. This is one of many stock portfolios I have, so why not? There isn't a ton of capital in here, and it never will be like a huge amount of my overall portfolio. So just kind of a cool experiment. And then for you guys, I don't know if you're interested in these kind of companies, but kind of introducing monthly dividend stocks to people that may not know about them. A lot of dividend stocks aren't monthly, so I think they're kind of cool to just have a portfolio of just monthly dividend stocks. But anyways, I'm going to stop rambling. If you guys have any questions, just let me know in the comments. You can follow me on Instagram or TikTok for other content. Those links will be in the description as well. I will see you guys in the next one.